online assets tends to add up, which is how you get to that about $191,000 for the average American now in digital asset value.
Financial planning thought leader Jamie Hopkins discusses digital asset protection and other major retirement concerns on Consuelo Mack Wealth Track.
Funding provided by ClearBridge Investments, the Fairholme Foundation, First Eagle Investments, Bill Miller, Baird, Strategas Asset Management, Research Affiliates, Royce Investment Partners, Seafarer Capital Partners, and Women Investing in Security and Education.
Hello and welcome to this edition of Wealth Track. I'm Consuelo Mack. How many digital devices do you own? Laptop, smartphone, smartwatch? How many digital accounts do you have? What about digital files? Well, it turns out Americans have multiples of these digital assets. A recent survey by Bryn Mawr Trust found that the majority of Americans have up to 5 digital devices, more than that if you are a high net worth individual. The majority of Americans have multiple digital accounts. 37% have 1 to 10, 29% between 11 and 100, 6% between 101 and 250, and 8% more than 250 digital accounts. And the number of digital files per person is in the tens of thousands. Now, many of these digital assets, think personal photos and videos, social media accounts, financial information, business accounts, and health records, are valuable, worth an estimated $190,000 on average in total. They can be a financial risk. According to this week's guest, managing digital assets is one of the biggest overlooked risks in estate planning. He is Jamie Hopkins, Executive Vice President and Chief Wealth Officer of WSFS and Bryn Mawr Trust, a division of WSFS Bank. Hopkins is an award-winning certified financial planner and retirement income expert. He is the author of 2 best-selling books, including Rewirement, Rewiring the Way You Think About Retirement, which we discussed in detail with him on a previous episode. It's available on wealthtrack.com. I asked Hopkins how concerned we should be about our digital assets.
I think our concern level about digital assets should be really high. When you look at this area of planning and assets for Americans, one of the things we find time after time again in surveys is that people just aren't paying enough attention to these. We don't have great security details around them. We're not tracking them. And digital theft is really the fastest area of fraud and criminal activity out there right now. So you couple all those things together with an aging population, technology moving faster than the speed of light today. To me, this is a really big area of concern.
Jamie, I was really surprised in the survey that Bryn Mawr Trust did about digital assets that we referenced in my introduction to you, that they put a large dollar amount. The Americans think that their digital assets are worth like $190,000 or something. Where does that number come from? I mean, where is the value in our digital assets?
Yeah, it's kind of a shocking number. Interestingly enough, I think it's a pretty good number. There was actually a McAfee study done about a decade ago that asked similar questions about how much this was valued. And I was reading an article online last year and realized that people were still quoting that same decade-old McAfee study. So I said, okay, we got to relook at this. So we reran that study. And so what you're looking at is people valuing what's their social media worth. That's actually not a top performing one. Business accounts are actually really the big driver. So think about business owners where their storefront now is their website. Their leads are now digital leads, right? And a lot of their delivery, if it's a blog or something like that, that's really all digital. And so when you wrap in all of those were a big driver. About 20% of business owners in the survey actually said that their assets were valued over $300,000. So when you took that subset, they really saw a lot of value there. For other Americans, it's emails, financial, online financial statements, healthcare records, websites, photos, all of those things add up to that amount.
Photos, I mean, who cares about, my photos of my family or whatever? I mean, what's the risk there?
Yeah, actually, the photos was interesting because when we looked at the survey respondents, they actually listed photos as the hardest one to recover if those digital assets were lost, because that's probably it. if you save that photo on an online, right, storage place, your email or an Instagram, and you lose it, it's gone. There's really no backup to those anymore. Now, that's probably sentimental value for most people. It's not something where you can actually like go on the street and say, hey, I'm going to sell you all my Instagram photos. For most people, that's just not worth a whole lot. But to an individual, it is. So part of it is think about what financial assets or how much would you pay to get those back if every online photo of your grandkids and kids and family all disappeared tomorrow. You would probably pay something to recover them. Maybe it's $1,000, $100, maybe for some people it's $20,000. And so each one of those kind of online assets tends to add up, which is how you get to that about $191,000 for the average American now in digital asset value.
You mentioned that the most valuable digital asset is your business accounts, right? So are you seeing those at risk now? And is that something that, when I have an online account and, we've got all sorts of filters and everything else that, like Microsoft promises that we've got or the various protective services, is that not enough?
Yeah, so those aspects of things, so you're thinking about like the security features, those really aren't enough.
They are not enough.
They are not enough.
Okay.
That's a portion of the conversation.
Okay.
So part of it is making sure that we're just protecting this from theft. That's a really big part of this. It absolutely is. The second part, though, is what happens if something happens to me? What if I become incapacitated? I'm in the hospital for weeks or months, and I can't go and access these things. Well, my payroll in my small business might be entirely through a digital service that if I'm the only one with user access to it, and I'm in the hospital, we can't pay bills without me. A lot of people's taxes are entirely done digitally now and filed electronically. And so you start going through all these different areas. Think about credit cards and how many places online you put your credit card. It's not just about the theft of it, but it's the fact that that's sitting out there and maybe it's automatic bill pay and something happens to you and your spouse tries to go pay it because that credit card, did actually get hacked and it shut down and they can't pay that bill anymore. So all of these different things start creating risks, not just from theft, but from loss, from just forgetting that it exists. And when you start looking at all these components, it's a lot more than just, the theft aspect. It's about continuation, protecting family, transferring assets. And an interesting other one is sometimes it's about deleting these things. It was interesting in the survey, about half of Americans actually said if something happened to them, they'd want a fiduciary or a family member to go delete their online accounts too. So in that part, it's, maybe they had a gambling account on a website and they want somebody to go delete that when they pass away.
How do we even start this conversation about managing our digital assets? I mean, we're talking about, by the survey's estimates, sometimes tens of thousands of digital files. It sounds overwhelming to me. What do we do?
Yeah, when you try to take this whole thing on in one bite, it can really feel overwhelming. One of the things that comes out of surveys like this and just conversations is awareness. That people need to first be aware that this is an issue and something they need to pay attention to. The second thing is I always I have kind of a checklist of items that I go through from an estate planning and just digital asset management process. So the first one is always awareness. You just need to know that the issue exists. The second one is start to get an accounting of what you have. So that can be as simple as some people write down a list of their online accounts, some people put it in an Excel file, but you just have to start figuring out what you actually own. What do you have out there? And then the second part, or the next part after that I think is always interesting, is are some of these valuable or not? Do you care about them? So I just say do a quick 1, 2, 3 priority. Is it a priority? Maybe, then absolutely not. So you might have a app on your phone. I used to play Candy Crush. I don't even know if it's still around, but you collected these little blocks. And look, that's technically a digital asset. I had to log in, but that wasn't important. That's all the way at the bottom at the 3, not important at all. I don't need to figure out what happens to Candy Crush in the future.
Okay.
But my email is probably a 1. My financial account's probably a 1. A social media account for some people might be a 1, but for others might be a 3. They just don't really care about it. So in that ranking, I think is really important. The next one, which will probably lead us to a little bit further of a conversation, is actually, is there value attached to these then too, right? Is this a crypto asset which has financial dollars attached to it? Is it hotel points or airline miles, which are really digital assets at this point? They're just electronically stored value that you might be able to redeem for something else. Video games actually have a lot of in-game purchases nowadays that grandkids and others might be spending a lot of money on these, and they could be very valuable. If you upload gift cards to, say, Amazon or Apple, it's interesting if you read like Microsoft's one, the uploaded cards actually, you lose the right to those amounts once you pass away. You can't actually transfer that once it's been uploaded to the system. So it's an interesting thing. And so is there value there? The next one after that I go to is, do you want to transfer these? Do you own it? Then going down to putting legal documents in place, executing them, and then communicating those out to the parties you need to. I kind of think the interesting stuff's getting to the first part. The other stuff's really execution on it.
But, the other stuff, like the low priority stuff that you're really not using at all, should we just start deleting that stuff? Or, canceling subscriptions, for instance? Should this be like a, daily or weekly or a monthly kind of housekeeping chore?
I wouldn't say a daily or weekly. I would say an annual checkup of your online presence is probably a good thing. Now, even on that one, are people going to do it every year? Maybe not. But it is likely a healthy thing to do. Just look at your digital footprint. Are there accounts that you are not using? Surprisingly, a lot of those accounts might still have information that could lead to online theft later on. People put their addresses in there, their emails, and maybe a security question. That's where I have seen some more of the risk is people say, well, I don't really use that one. But, oh, I forgot that I did answer the same 2 security questions that I answered for my bank account also on this silly little site that I don't really use. Well, if that site eventually gets hacked and all your information gets stolen, it would have made sense to go in and shut it down if you're not using it anymore. So go there, delete your account. Some states have gone to that right to be forgotten, and that you can actually go so far as to say, hey, I would like you to delete the information about me. But most of the time, it's just go delete, shut down the account, move on.
I mean, another part of a digital asset is all the passwords as well that you just mentioned, that there are security questions or whatever, but that's another big issue, right?
It's a huge issue. And I'm just going to use that example again, a business owner that becomes incapacitated. And does anybody at their work have their passwords, usernames to get into these sites? And a lot of times you see that that's a single point of failure for small businesses because the business owner, right, is the CFO. They are the IT department, right? They are bill pay. So they have everything. Or maybe you delegated it to one person and they left the company and all of a sudden you can't get into the accounts you thought you could get into. And if it was a poor exchange and maybe you didn't get along with the person when they left your company,
right?
Now you have a whole big problem and it can take a long time to get that settled. When you pass away too, there's a lot of interesting things that occur with digital assets. Is almost every single account, there's something called terms of service agreements, and we abbreviate those TOSAs. That's that form that when you set up your account, you scroll to the bottom of, right, Consuelo, as fast as humanly possible and say, I accept, I agree to all these terms. You never read it?
Never read it.
Mostly in there's 2 really interesting provisions that stick out. The first one is you cannot share your password or username with anybody for any purpose. So a lot of people are like, well, I'll just give that to my spouse, my friend, my fiduciary, they can go in. First of all, that's a breach of your agreement with that service provider, legally speaking. The second one is almost every single one of those online service accounts list in there that your right to this account terminates upon your death. They are lifetime leases almost across the board in the digital space. And that is shocking to people. So Apple is a great example of this, at their terms of service. You go buy a CD, an album, and what you see there is that right to use that music or download ends upon the end of your life. It is not something you could leave to your children, to your spouse. It terminates upon your life. And that's almost across the board universally with online accounts and online assets, that they are lifetime leases and they are non-transferable to your heirs or spouses upon your death.
Is there anything you can do to override that?
Not a lot, actually. So that is pretty much going to be the contract, right? Those things we don't really get to negotiate, right? You can't like write in the areas of those you don't like. They are legally binding contracts. There are some small things, so I'll use the business owner example again. What that really means is you need to make sure as a business owner, those online accounts, your email, your website, any of those service and tools are set up under the business name, not the individual owner's name. Because if the individual owner were to pass away or become incapacitated, the business has no right to those assets. And that's really an improper ownership issue versus anything else. The other thing is sometimes, while this is super rare, people will set these up inside of trusts. So the trust is actually the owner of that digital asset or account. That's not real normal, but in essence, then they could be maintained as owned by the trust and not shut down upon your death. But that's really not super common. So instead, it's not about changing ownership. There's not much we can do in that. Instead, it's about providing access to our heirs, our loved ones, our spouses, in case something happens to us. And there is a process and planning that can be done in that area. And really, since 2016, changed a lot because there was a rule put in place in most states called RUFADA, the Revised Uniform Fiduciary Access to Digital Asset Act. I know everybody right now that listened to that one said it rolled right off the tongue. But RUFADA was essentially a uniform law that 48 out of 50 states put in place that provides a process for your trustee, your executor, or the fiduciary to have access to these online accounts for purposes of wrapping them up. Not for changing ownership, but just for purposes of wrapping them up in your life. But you have to give specific instructions inside your legal document for them to have access. If you don't actually use the terms, digital assets inside your power of appointment, your will, your trust, that fiduciary will not have access to them if that terms of service agreement says these are non-transferable. So that's a really important but small point.
So Jamie, this conversation, number one, it's an eye-opener. And number two, it tells me that I should revise my will. If I have a trust, that should be revised. Any sort of estate planning, they need to be updated, right? This is an area that has been largely ignored by most people.
Correct. Any legal document in that world, right? Your trust, your will, your power of attorneys that were really done pre, say, 2016, 2018 are unlikely to have any digital asset language inside of them. So they should be updated at a minimum to address digital assets. There could be other things you want to change, but pretty much everything pre those dates are actually out of compliance with most state laws as it requires to add this language to give fiduciaries access.
What's the most important thing that we should do now?
I think the single most important thing you should do to start is just figure out all the digital assets that you have. That's the first one, because if you don't do that, but you update your will and your trust, and then your spouse comes along after you passed away, or your kids, and tries to find them, they're not even going to be able to find them, right? That's like having the key to the treasure chest, but you don't have the map to the treasure chest. So you got to make the map first, and then you can say, hey, here's how you get in, and all those things. So that is really step one. Do that accounting, figure out what you have, and then go say, what do I need to put into my legal documents to make sure that these things are taken care of and that my family is actually taken care of. I keep talking about the digital assets. It's not really about them. It's about your loved ones, so they don't inherit a mess, so your business partners don't end up with a problem, so that you don't have theft that occurs. It's not about the digital assets. It's about the family and loved ones that you really want to make this easier for in case anything ever happens.
You are a financial thought leader in the retirement planning space, so let's just broaden this conversation a bit. Are there any changes that we should be aware of in the big, beautiful, or big, ugly tax bill that recently passed that affect retirement planning?
When you look at the whole bill, it really is tax cuts again. It's and extensions of tax cuts. The major thing for most Americans that this continues to open the door for is about thinking about tax location. And what is that in simplified terms? It's should you have things that are not just in your 401k, in this tax deferred? Should you have after-tax investments in traditional brokerage or taxable accounts and Roth accounts? Roth conversions are going to continue to be, over the next 3 to 5 years, one of the biggest opportunities for millions of Americans, or just Roth contributions to 401ks. You know, going back 15 years ago, we didn't have a lot of Roth accounts inside of our employer plans. Fast forward, I would say the majority, especially large employer plans today, have Roth saving options in them. And I would strongly encourage people to take a look at that. And really what you're doing there is you're paying the taxes today in a really historically low tax rate environment, and continue to be after this new bill, and allow those assets and investments you put into your retirement plan to grow tax-free upon some conditions when you leave. I'm a very big believer in tax diversification, that we should have some tax-deferred money, some tax-free money like a Roth, and then some taxable money that we save. One of the reasons for that is what you brought up. Bills come in with every new regime, every new administration, and they change the rules on us. And so by having kind of savings in a couple different accounts, it really does open up the opportunity to see what's going on in the future. When is it better to have what type of account? It also reduces the risk by tax diversifying that one law change would throw your whole plan out of whack. So I think those are really important things. That's the single biggest, I think, across the board opportunity over the next couple of years for most Americans.
And Jamie, we always ask every guest if they have one investment that we should all make in a long-term diversified portfolio. What would it be? So what would your one investment recommendation be?
I think one thing that I'm telling a lot of people and doing myself is actually take a little bit more risk in growth companies than you might have been taking in the past right now. And so whether it is an AI tech play, there's a bunch of funds out there, whether you're thinking about alternatives, private markets, private credit. But I really do think right now there is a huge opportunity in what would be traditionally considered that alternative bucket, and to actually probably move higher of an allocation into there than historically has been suggested. I've talked before about having a 1 to 2% allocation to crypto. Not everybody likes crypto, so you can just say, hey, look, I don't understand it. I don't want to be invested in it. But I would say take that 1 to 2% or higher and put it into something that's maybe going to give you a little bit more growth potential. Even if you're in retirement, I suggest this for people, because your investment time period still might be 30 or 40 years. And I think some people lose sight of that. They get to retirement and think, I need to be super conservative. And I say, well, you have a 40-year investment time period. You can still take a little bit of risk here.
Jamie, you have a new book coming out, and it is called Your Retirement Sketchbook, 125 Lessons. Quickly tell us about it.
Your Retirement Sketchbook is under this notion that everyone's retirement is like a sketch, right? Think about drawing on a piece of paper. It's unique to you. And it's a sketch with a pencil. You're gonna have to erase things, redo things, draw a new pathway. And that whole kind of notion I thought was really interesting. So the whole book's actually gonna be a topic, 125 topics, from getting to know your money, to saving for retirement, to investing, to preparing that income plan, to living in retirement, and then preparing for end of life. And so we'll go through that whole phase, but in kind of chunked up formats. So every topic will have a fact, description, an explanation, reflection questions, what you should consider doing on that, like saying use an HSA, how are you going to fund retirement healthcare. But then we actually have a sketch. So we actually did drawings for every single topic. So it's a very interesting, visual and then kind of academic approach to these phases of preparing for retirement. And so we hope it's a very fun way for people to learn about retirement and engage with it. Then we actually give some sketch pages in there to draw some things for yourself too. So it's a little bit different than some of the work I've done before, but hopefully something that really resonates with people, bringing that visual learning style for many people to retirement planning.
All right, Jamie Hopkins, such a treat to see you again. You are always just full of very useful information. So thank you so much for helping us with our retirement planning once again.
Thank you so much for having me on again. It's great to see you.
At the close of every Wealth Track, we try to give you one suggestion to help you build and protect your wealth over the long term. This week's comes directly from our conversation with Jamie Hopkins. This week's action point is manage your digital assets. As we just discussed, make an inventory of what you have, including digital devices, smartphones, watches, laptops, etc. Prioritize your digital accounts, personal, business, social media, financial, health, and so on. Have a secure list of passwords that family and/or advisors will know how to access. And finally, include all of these digital assets in your will and estate planning so they are not left hanging for your family or potential hackers to deal with. It is a brave new world out there. Digital assets can be valuable and a huge risk if left unattended. Well, next week, Winning Traits of Great Investors, William Green, author of Richer, Wiser, Happier, has the details. Please follow us on Facebook, X, and our YouTube channel. Thank you for taking the time to join us. Have a relaxing Labor Day and make the week ahead a healthy, profitable, and productive one.